How the question is clear, and you can see it from wherever you are joining from.
Yeah.
Okay. Myself, I'm talking from UK, and I hope you people you are in Africa and Ghana to be precise. Okay. So, all right, let's take this question as the question on the sell and lease back. Then we take additional one question. Then we move on to reassessment of lease liability. So someone should take the question for us. Okay, someone should take it for us. Yeah, please, someone should take the. Yeah, Auntie's Benny is Betty. Do you want to take the question for us?
Okay. Kotai sold a building for its fair value of 5 million to a finance company on 30th November 20x6 when its carrying amount was 3.5 million Ghana cedis. The building was leased back from the finance company for a period of 5 years. The remaining useful life of the building was deemed to be 25 years, so it can be concluded that control of the building has transferred to the finance company. Lease rentals are 440,000 Ghana cedis payable annually in arrears. The interest rate implicit in the lease is 7%. The present value of the annual lease payment is 1.8 million Ghana cedis. Kotai has recorded the cash proceeds, derecognized the building, and recorded a profit on disposal of 1.5 million cedis in the statement of profit or loss. No other accounting entries have been posted. The directors have told the financial controller that the accounting treatments outlined above are correct. Any further time that the financial controller spends reviewing these transactions will be looked on unfavorably when deciding her bonus for the year. Required. Discuss the correct accounting treatment of the above transaction in the financial statement of Kotai for the year ended 30th November 20x6.
All right, thank you. Thank you very much.
Mm.
Thank you very much. Okay, so they are asking us to do the entries on what? 30th November 2x6. Okay, when was the asset sold? The same date. Okay, so they are just asking us to, so I'll do it for 30th November 2x7. That is maybe 1 year after the transaction, so that we look at how to calculate the finance cost, the depreciation, and those ones. But this one, they're just talking about the treatment. The issue now is, can we classify the transaction as a sell? The transaction that we have over here, the asset that they are selling to the finance company, can it be classified as a sell? All the information that we have, can it be classified as a sell?
Yes.
Okay. Why are we saying yes? What have you seen in the question? That is telling you that the transaction can be classified as a sell.
The useful life of the asset.
Okay.
The substantial useful life of the asset has been transferred to the finance company.
Okay. So you can see that it can be concluded that control of the building has transferred to the finance company. Insurance, maintenance of the building has been given. Everything, ownership and everything has been transferred to the what? To the finance company, who is a customer. So we have actually sold the assets, but we are leasing the asset back. So we have to use the provisions of the 16. They have derecognized the assets. That was right. They have recognized a profit of 1.5. That was wrong because we only recognize profit out of the proportion of the what? The value of the asset that has been transferred to what? To the customer, because we are going to be using the asset back. So we are retaining portion of the ownership of the asset. So what is the portion of the ownership that is being transferred to the customer? We recognize a profit in relation to that particular portion. So the asset is 15 million. The carrying value of the asset is 15 million. But you enter into an agreement to lease the asset back and you are having a right of use of what? 12 million. It means that out of the 15 million, you are retaining ownership of 12 million and you are transferring 3 million to what? To the person. So you recognize profit on only the 3 million that has been transferred. So what will happen is that we discuss how it should be accounted for and we look at the accounting treatments, which will be for the subsequent year. So you can see that they have calculated the present value of the lease for you. Sometimes they will not do that for you and they will ask you or they will give you the lease rent tax. They will give you the lease rent tax. Then you have to calculate the present value yourself, like the way we have done that one for the lease liability. So you take the rentals and you discount them over the lease period. Then you get your lease liability. But this one, the question has already done that for you. So we are going to look at how to account for this by discussion, and we also look at how to go about this particular issue. Okay. So let me do these things, then we move on. So let's come to the solution. Okay. So let's look at this. How should a company account for this? Okay. First of all, when there's a sell and lease back, the first thing that you have to do is to determine whether the sell or whether the transaction is a sell or constitutes a sell in accordance with IFRS 15, revenue from contract with customers. So this one, with all the information that we have and with everything in the question, we can state that or we can conclude that the transaction constitutes what? A sell. Ownership, control, and everything associated with the asset has been transferred to the finance company. Therefore, the company should de-recognize the asset at their carrying value. They have done that. That was nice. The company should now recognize a right of use to the proportion of what? The asset that they are maintaining, the carrying up value of the asset that they are maintaining, which will be calculated as you put a formula there, present value over the fair value times the what? The carrying value of the assets. Okay, then the company will now recognize a lease liability because they are taking the asset back and they'll be paying rent tax. So the lease liability will be calculated as a present value of the minimum lease payment, which will be carried at an amortized cost subsequently. And the company should also recognize a profit to the proportion of the ownership or control that they have transferred to what? To the customer. So the profit of 1.5 is wrong. The cash proceeds that they have recognized is correct. The derecognition of the asset is also correct, but the profit that should have been calculated would have been the portion of the carrying value that has been what? Actually transferred to what? To the finance company. So that is how we are going to go about it. But let's look at, we are doing this for the next year, which will be because the asset was sold on 30th November 2x6. So let's assume that we are going to do the entries for the subsequent year. So we'll use this question to do everything. Then we move on to another question. So what will happen is that, first of all, the company has to recognize the right of use. So the company has to recognize right of use, which will be calculated as, so we have the right of use, which is calculated as the present value of the lease liability, present value of the lease liability over the fair value of the assets, over the fair value of the assets times the carrying value of the assets. Okay. So let's go to the question and pick those figures. So the right of use will be calculated as, let's come here. So let's see whether they have given us the present value of the annual lease payments. Can we see the present value of the annual lease payments?
Yeah, 1.8 million.
Okay. Sometimes they cannot give that to you, so you have to calculate it yourself. So you use the 440 and use the interest rate to what? To discount it. If you are not giving, you calculate it like the normal way that we used to calculate. So that will be 1.8 million. 1.8 million divided by the fair value. What is the fair value there? I'm sure it's 5 million times the carrying value, which is 3.5 million. So what is our right of use? So the fair value is 5 million. Our carrying value is 3.5 million. Okay. So what is our right of use?
1.26 million.
1.26. So right of use will be 1.26 million. Okay. The right of use will be 1.26 million. All right. So this this right of use, this right of use will now be recognized as an asset. If there's any initial direct cost, we add. If there's any dismantling cost, we add. Anything, it will still be calculated as the asset that we know. So this will be carried for 5 years, which will be subsequently be depreciated. So let's come to the lease liability. The lease liability is given to us already. So we have our lease liability. Our lease liability. We have our lease liability. Lease liability to be 1.8 million. Okay, so we have to determine our profit on the sale. So let's determine the profit on the sale. Okay, what is the carrying value of the assets?
3.5 million.
Okay, what is the portion of that are we returning? What portion of the 3.5 are we returning? What portion of the 3.5 are we returning? Can you see the portion? What portion of the 3.5 are we returning? Do you get my question?
No, sir.
Okay.
0.
Okay, the carrying value of the asset is what? It's 3.5.
3.5.
Okay.
Yes.
The right of use. Where are we getting the right of use from? It's not the same asset. The right of use that a company will be recognizing, it will be from the same asset, isn't it?
Yes, please.
Yes.
Okay. So our right of use that we are getting from leasing the asset back is 1.26, but the carrying value of the asset is 3.5. It means that we are retaining 1.26 out of what? Out of the 3.5. So we are transferring the what? The remaining portion. So the 3.5, which is the value of the asset, we are going to maintain 1.26 out of it because we are taking the asset back. We are going to lease the asset back. So the remaining 3.5 minus the 1.26 is the portion of the ownership that we are transferring to what? To the customer, the finance company. So your profits will be calculated on the portion that you are, the portion of the carrying value that you are transferring to the company that is buying the asset. And that will be calculated as a 3.5, which is the original value minus the portion of the asset that you are retaining, divided by the 3.5, which is the value of the asset, the carrying value of the asset, times the profit, the normal profit that you are going to make, which is 1.5, which will be 5 million minus 3.5. This is the profit that we are going to recognize. So we recognize the profit on the portion of the asset or the percentage of the control that has been passed on to the company. And this is how we calculate the profit. Someone can also calculate the profit by passing a double entry. I will show that too. And this is how we go about this one too. What will be the profit? What will be the profit? What will be the value of the profit?
Uh, 0.96.
0.96. Okay. 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 So we have 0.96 million. So the profit that the company is going to recognize will be 0.96 million. So it means that the 1.5 over there is overstatement. So this is the initial recognition. We have the right of use, the lease liability. We determine the profit. Then we now de-recognize the asset. Let's pass a double entry. Sometimes you can also pass a double entry to determine the profit, which is the 0.96. So let me also use that. Let me also determine that or show you how you determine that using the double entry. Okay. So let's come. The first entry that you have to do is to debit cash. So from the sale, you are going to receive cash. So you debit cash of what? 5 million, which is the value that you are receiving from the sale. You are going to debit cash. Debiting cash, you are going to credit the assets. Because you are selling the asset, you are going to credit the asset at 3.5. So you are de-recognizing the asset. Okay, this is the first entry that you are going to do to remove the asset from your books. Okay, what will happen is that you are going to take the asset back, then you now debit a new what asset, which is the right of use of 1.26. Okay, this right of use, you count with a liability. So you credit a liability, a lease liability of, you credit a lease liability of 1.8. Okay, let's now add it and see what we are going to get. What will be the difference? Let's now add to get a difference. So let's look at the debit side. You can see at the debit side, we are going to have 5 million plus what? 1.26 million. That will give us 6.26 million. Let's add the credit entries and see the difference. So the difference will be credit, profit, or loss. The debit entries must be the same as, or the total of the debit entry must be equal to the total of the credit entry. So let's add and see whether the difference will not be 0.96. Would that be 0.96?
Yeah.
Okay. So you can also determine your profit from this double entry that you are going to pass. And I also say that the profit can also be calculated like this. You can also calculate the profit by having what we call the fair value of the asset, minus the present value of the lease liability divided by the fair value times the normal profit of 1.5. Okay, so you have your 5 million minus 1.8 divided by 5 million times 1.5. You still get the 0.96. So anyhow you do it, you can also try that one. Okay, you can also try that to get your 0.96. There is no problem with that. Let's look at the subsequent measurements. So the initial measurement is you debit cash, you derecognize the asset, you now, that is a sale, you have cleared the sales. Now you now go to the period of what? The lease. So the period of the lease, you are going to recognize a lease liability in relation to the amount that you are going to pay. You recognize right of use. Then this right of use and the lease liability will now be subject to what? Subsequent measurement under the normal lease. Under the normal lease. So what we do is we come to the lease liability. We come to the lease liability. We come to the lease liability, which is the subsequent measurement. We have the lease liability to be here. Then we have the year. Let's assume that we are doing this for 2x7. So we have the balance brought down on the lease liability, or the balance at start, which is 1.8. Then we charge the finance cost on that because we are paying in arrears. So finance cost will be 7% of this, 0.07 times 1.8. So that will be, let me show you where the 0.7x. So the interest rate implicit in the lease is 7%. That is that. Then we come here. So what will be the finance cost? What will be the finance cost that we are going to get?
0.126.
0.126. So let's make it 0.13. So at the end of the year, what are you going to do? You pay your rentals, isn't it? So you have the rental payment. How much are we paying as the rentals? So the rental payments, how much are they paying? In arrears, how much are they paying?
0.4, right?
So we are paying 0.44. So 0.44. So we are going to pay 0.44 out of this. So what will be the liability that we are going to have at the end? So at the end, so we have at the end. Okay. So at the end will be how much? 1.8 minus 1.8 plus 0.13 minus 0.44.
2.37.
2.37. So if you are doing the amortized table, then the 2x8, you calculate your finance cost, then you subtract your rentals from it. But this one, you can decide to show this one. Part of it will be current liability, part of it will be non-current liability, but it's not compulsory. You can just show that 2.37 as a non-current liability in the statement of financial position for the 2x7. But you can also decide
Please take the computation again.
Okay, we have the balance brought down, which is the lease liability. We are paying in arrears. So it means that the 1.8 is a balance at the beginning. It's money. Let's assume that you are taking this money from the bank. So you are going to have the 1.8 from the beginning to the end of the year. The bank will charge you interest of 7% on the balance that you are currently owing them, which is 0.13. And at the end, you are going to pay part of what? The loan, which is a 0.44. So if you want to know the amount that you are owing the bank at the end of the year, will be the balance that you are having with them, the amount that you are owing them, the interest that they have charged on that, then you subtract the amount that you have paid. So your balance that you are having now will be the amount plus the interest minus the amount that you have paid. That is a 2.37. And I'm saying
getting
It would be 1.49.
it's 1.49.
Yes,
Yes.
please.
A. Really? So the person was
Yes.
adding rather than subtracting.
Thank you.
1.39.
1.49.
1.49.
Okay. 1.49. Okay. 1.49. Okay. So the person was adding rather, maybe
Hello, sir.
Yes, yeah.
The 0.44 from the question.
The 0.44,
the rental payment.
yeah. It's one way.
It's in the question.
Yes, please.
Okay.
I hope you can see that.
Yes.
Okay. So that is the amount that they are paying every year. Okay. So this is a subsequent measurement of the lease liability. And I'm saying that the lease liability, the 1.49, you can decide to split it. You can decide to split it. Part of it will be for current liability, part of it will be for non-current liability. How do we do the splitting? We know that at the end of every year, we are going to be paying renters the amount, we are going to be paying an amount of 0.44. This amount of 0.44, part of it will be for the principal payment, and part of it will be for the interest. Interest will always be charged at the end of the year. So you calculate the interest on this one, then you subtract it from this one. The remaining figure will be the balance that you are going to pay, or the portion of the liability that you are going to pay at the beginning of the year. The interest will be paid. So let's calculate the interest on this. What will be the 0.07 on the 1.49, which will be for the next year? So the balance brought down for the next year, will be 1.49. So what will be the interest on that? So the finance cost will be the 0.07 on this one. What will be the figure that you are going to get?
0.10.
0.10. Okay. But at the end of the year, how much are you going to pay? You are going to pay 0.44. Okay. So the assumption is that 0.34 out of this is paid at the beginning of the year. The interest, you are going to charge the interest. Interest will be charged at the end of the year. So you're only paying the interest at the end of the year. But part of this 0.44, part of it is paid at the beginning of the year, which is a 0.34. It is only the interest that you are going to pay at the end of the year. So we do for you to know the current portion of the liability, the lease liability, you just subtract the finance cost for the subsequent year from the lease rentals. So 0.34 will be a current liability. The non-current liability will be the 0.34 from this one, because this is the amount that we are currently owing them. But it is not something that you have to do. If you don't know how to do it, just show your non-current liability for the year as 1.49. Leave it and move on. All right. Let's come to the right of use. Let's come to the right of use. The right of use will be depreciated for the year. So we come to the right of use. The right of use will be depreciated. So the right of use will be depreciated. So we charge depreciation on the right of use, which will be the value, which was 1.26, divided by 5 years, the lease period. Okay, that'll give us how much? So this one will go to profit or loss.
0.25.
Okay, 0.25. Okay, so this will go to profit or loss. The finance cost will go to profit or loss. So 0.25. 0.25 will be the depreciation that will go to profit or loss. So the difference, the 1.26 minus 0.25 will go to statement of financial position. All right. So that is all about the sell and lease back. The only thing that is different is the computation of the right of use and the computation of the profit. That is the only difference from the normal lease that you know. That is the only difference. Okay, let's pick a question where the sell will be below the fair value. How do we go about that particular issue? How do we go about that particular issue? So I'll pick a question here, then we see. Okay, question 7 will do. All right. Okay, so let's come to the question 7. Someone should take the question 7 for us. I'm even thinking of sending it to the top. Okay, let me send it to the top so that we can see it very well. All right, so someone should take the question 7 for us.
On 1 July 2019, HPL sold its warehouse building to Macro Finance Limited for cash of 1,400 million Ghana cedis. Immediately after the transaction, the building was carried at 900 million Ghana cedis and had remaining useful life of 18 years. At the same time, HPL entered into a contract with MFL for the right to use the warehouse building for 10 years, with annual payment of 180 million Ghana cedis payable in arrears. Fair value of the building at the date of sale was 1,500 million cedis. The rate of interest implicit in the lease is 11% per annum. The terms and conditions of the transaction are such that the transfer of the building by HPL satisfies the requirements for determining when a performance obligation is satisfied in IFRS 15. HPL's incremental borrowing rate is 12% per annum. Required. Prepare the extracts relevant to the above transaction from HPL's statement of financial position and statement of profit or loss for the year ended 31 December 2019 in accordance with the IFRS.
Okay. Okay. All right. So this one, this is a sell. This particular transaction constitutes a sell. So we just move on to how we go about this issue straightforward. All right. So the question is, let's determine the carrying value of the asset. What is the carrying value of the asset given to us? What is the carrying value of the asset from the question?
No, 900 million.
900.
Okay. 900 million. Okay. So the carrying value is 900 million. 900 million. Okay. What was the fair value?
1,500.
1,500. Okay. What was the sales proceeds?
1,400.
Okay. The amount that they have received is 1,400 million. Okay. So the rentals is what? How much are they paying?
180.
180. It's in arrears, isn't it?
Yes.
Yes, please.
Okay. So they are paying the rentals is 180 million in arrears, payable in arrears. Payable in arrears. Okay. All right. Okay. The fair value of the building at that date of sale was 15 million. So they are saying that this transaction constitutes what? A sale in accordance with that particular standard. So the first thing is we have to calculate the right of use. So initial recognition, which is at the date of the sale, which is January. So January of the year. So we have the January 2019. We have to account for this particular transaction. So how do we account for this particular transaction? The first thing that we have to calculate is that we have to calculate the right of use because the company is going to take the asset back. So they have to recognize a right of use. All right. So we calculate the right of use. How do we calculate right of use? How would the right of use be calculated?
So the present value of the lease liability over fair value of the asset multiplied by the carrying value.
Okay. So the present value of the lease liability divided by the fair value of the asset times the carrying value. Are we giving the present value of the lease liability? Straightforward.
No.
So we have to calculate it, isn't it?
Yeah.
Yeah. So we have to calculate it by discounting all the rental payments. So the rental payment is 180, and it is for how many years? 10 years, isn't it? All right. At 11%. So you can't take your time and do it one by one for 10 years. So what you do is you use annuity. So the right of use will be calculated as you use annuity for this. That will be 180 times the annuity factor. So let's look for annuity factor. The annuity factor for 10 years, 11%. So let's calculate the annuity fast. People using calculator, let's get the annuity factor. All right, so maybe some people are wondering what we call annuity. Okay, annuity factor is calculated as the A is equal to 1 minus 1 plus R divided by R. This is for negative N. So 1 minus into bracket 1 plus R exponent negative n all divided by R. R is the rate and the n is the number of years. So we have 11%, which is 0.11, and the n is 10. So let's do that and get the answer to 3 decimal places on the calculator. Annuity is where you are paying a fixed amount or you are receiving a fixed amount at the end of a given period. The amount that you are receiving or the amount that you are paying is fixed. That's what we call annuity. All right. Let's
The
get
5.889.
okay. 5.889. 5.889 divided by the fair value is 1,500. Am I correct? Times 900. Am I correct with the 900 and the 1,500?
Yes.
Okay. So let's get the right of use. So the lease liability will be, so let's get the lease liability. After calculating this, then that is your lease liability. You don't have to do anything again. Or you can also show working for the lease liability. There is no problem with that. So 180 multiplied by 1 point. That's what multiplied by 5.889. What are we getting?
1060.
1060
60.
divided by 1,500 times 900. What are we getting? Our right of use will be what?
It's 636.01.
04.
636.
0.04.
Okay. 636.04. You can just leave it like that. 6.04. You can just make it 636 million. We don't have any problem with that. All right. So this is the right of use.
Okay.
So you have the present value of the lease liability already, which is 1060. You have the right of use. Then the next one is what will be the profit that you are going to recognize. You have to determine the profit that you are going to recognize. So the profit will be calculated as, so the carrying value of the asset is 900. We are retaining 636. What portion of the carrying value are we actually transferring to the buyer?
This is for
Is 264.
4. Yeah.
So if we have transferred, or if we are not taking the asset back, it means that we have transferred all the 900. So the profit will be recognized on the 900. But now we are only transferring what? This particular 264. Then times the normal profit that we should have made, which is the carrying value minus the what?
that would have been 1,500 minus 900.
Okay, 1,500 minus what? Minus
900.
900. So that will give us 600, isn't it?
Yes, sir.
Okay. The profit is not calculated on the amounts that you have received. You can see that the actual amount was 1,005, but you have paid 100 as an advance payment. So that 100 will be added to the right of use. So let me just add the 100 at once. The 100 is treated as advance payment or initial deposit, which will be advance payments under this one. So this will be 600. Okay. So what will be the profit?
One seven six.
176. Okay, 176. So this is the profit that you are going to recognize in the statement of profit or loss. So this is the only thing. The only thing I want to show you is the amount below the what? the fair value. So that 100, which is the difference over there, will be treated as an advance payment, which will be added to the right of use. Apart from this one, the lease liability of the 1060 will be amortized. So we calculate interest of what? What is the interest rate? The interest rate is 11%. So you use 11%, you calculate interest of 11%, finance cost of 11% on that. Then you come to the right of use, the 6366 plus 100, which will be 736, will be depreciated over the lease period, which is 10 years. We calculate the depreciation and send it there. The lease rentals, we are going to subtract it from the lease. Okay, let me just show those things. So let's come to the subsequent measurements. Okay, the subsequent measurements. Because time is going, I want to do the reassessment first. Okay, so which will be at the end of the year. The subsequent measurement is always at the end of the year. So that will be December. So we have the lease liability as starts. So we have the lease liability. So we have the lease liability at start, which will be 1060 million. We calculate our finance cost of 11%. So that will be 0.11 times 1060. What are we getting? Then we subtract our rentals. Our rentals will be 180. That is the amount that we are paying at the end of every year. So the finance cost is how much?
116.6.
116.6. So what will be the liability at the end? So that will be the liability at the end. So the finance cost will go to profit or loss. This one I don't have to waste time because we know how we subsequently measure this. So the right of use will be depreciated, which we have the depreciation of the right of use, which will be 736 million divided by 10 years. So 10 years. Depreciation will be 7.36 million. That will go to profit or loss. This will also go to profit or loss. Then the difference over here will go to statement of financial position, and the right of use will also be recognized at their carrying value in the statement of financial position. So this is all about the sell and lease back below the fair value. This is how we account for it. The difference will just be added to the right of use as an advance payment or initial deposit. If it is above that one, what do we do? If it is above that one, what do we do? We also have to look for how we do that one. The excess amount will be treated as what? Additional loan, which will be accounted for as a financial liability. So the next question in the document is above. You can try that one and see. All right.
Hello, sir. The depreciation,
Yeah.
is it 73.6 or 7 point?
7 point. Is it 73? Okay, it's supposed to be 73.
73.
Okay. Sorry. So 73.6. Okay. So let's come to reassessment of lease liability. Then we pick a question on that. Then we know that we are done. So reassessment of lease liability. Okay. So the reassessment of lease liability is not anything. It's not anything difficult. It's not anything hard. You can see that the question that we just solved, we agreed that our rentals that we are going to be paying will be 180 every year at a discount rate of 11%, and the lease term is 10 years. Okay. The issue is if any of these factors change, what would have been the impact of that on the lease liability? That is the reassessment of the lease liability. Or we are paying the rentals of 180. 90 out of this one is variable. What do we mean by it is variable? It is dependent on the what? The customer pricing index is the 90 million changes in relation to the inflation rate in the country. So if the inflation rate today is 15%, that is why we are paying the 90. If it has increased to 17% in the subsequent year, it means that the amount that we are going to pay will not be 90 again. So what will be the impact of that on the lease liability? So we reassess the lease liability by taking into consideration these factors. So there can be a change in any of the factors that we use to compute the lease liability. The lease rentals can change. Portion of the lease rentals can be fixed. Portion of this will be variable. If it changes, it means that there will be an impact on the lease liability because the lease liability was initially calculated on 180. Right now, the 90 has now increased to 100. It means that the lease rentals, the new one will now be 190. But the one that you have in the books is for 180. So it means that you have to recalculate your lease liability, taking into consideration the difference in the rentals. The discount rate that you use initially can be 11%. It can happen after 1 year, the discount rate is now what? 12%. What will be the impact of this on the lease liability? What will be the impact of this on the lease liability? You also have to re-estimate your lease liability and look for the impact. It can happen that the initial lease was for 10 years. Now we have reduced it to 8 years. So if it is 8 years, it means that the liability that we have in the books should not have been the liability because the lease period has now reduced to 8 years. What will now be the new lease liability now? We have to reassess the lease liability, look for the impact and account for it. So if the lease liability is increasing, what will happen is that the increments, the difference will be added to the lease liability. The same difference will be added to the right of use. If the lease liability is reducing, the difference will be subtracted from the lease liability. The difference will be subtracted from what? Right of use. If the company is using the cost model for accounting for the right of use, but the company is using a revaluation model, the increase in the lease liability will be seen as a revaluation loss. An increase in liability is a loss to the company. So that particular increase will be taken as or will be seen as a revaluation loss. That will be subtracted from the revaluation surplus that we have in relation to this particular asset. If there's a reduction in the lease liability, that will be seen as a gain, a revaluation gain, and that will be added to the revaluation surplus account, or it will be taken to other comprehensive income. But in most cases, the reassessment will always be for an asset that is being carried at a cost model, because the question will not tell you whether the lessee is carrying the asset at cost model or revaluation model. So that is all about the reassessment of the lease liability. If one of the factors that is being used to calculate the lease liability has changed, what will be the impact of that on the lease liability that you now have? So we have to reassess the lease liability, taking into consideration the factor that has changed. That is the reassessment of the lease liability. So the rentals can change, the interest rates can change, and also the lease period can also change. What will be the impact? We have to reassess or recalculate the lease liability, taking into consideration the new or the revised factor. That is what we call the reassessment of the lease liability. What is the lease liability now we have? And what should have been the lease liability if the 8 years was used? We compare the two any increase or decrease will be treated as a reduction in the lease liability and also a reduction in the right of use if the company is using cost model. That is all about a reassessment of the lease liability. And we are going to take last sitting or this sitting question on lease. So let's try to solve that one. Then we call it a day or a morning for this particular section. So let me go and pick the question there. Then we move on. All right. Please, I hope we can see the question.
Yes, please.
Okay. So someone should take that question for us. All right, so someone should take it for us. Yeah, someone should take it for us.
On January 1, on 1st January 2022, Avoca Grains Plantation PLC acquired a combined harvester from Awuli Farm Technologies for a lease term of 5 years, with installment payable annually in advance. The useful life of the harvester was estimated at 5 years. Avoca paid the first installment of 16 million on January 1, 2022. However, subsequent lease payments are subject to increase or decrease in line with consumer price index. At the lease inception, Avoca estimated that CPI will increase by 10% annually. However, CPI increased by 14% in 2022, and consequently 68.4 million was paid on 1st January 2023 as second installment. At 31st December 2022, Avoca estimated that the annual increase in CPI will continue to be 14% in future years. Avoca is also required to pay a usage fee of 0.3 cedi per acre of harvest in excess of 30 million units per annum from the machine. At the lease inception, Avoca planned to use the harvester to achieve 40 million acres of harvest each year during the lease term. During 2022, Avoca harvested 40 million acres of grains, and accordingly, an amount of 3 million was also paid along with the second installment. Avoca's incremental borrowing rate is 11% per annum. required, advise Aboka PLC on the financial reporting treatment for the above in the financial statement for the year ended 31st December 2022. So we say note the single period present value and noted present value factor based on 1 cedi are provided below for 11% discount rate.
Okay, so this one, they're just helping you with the discount rates. All right. Okay. So they are saying that the company acquired a combined harvester from a company for at least term of 5 years with annual installment payable annually in advance. So it means that at the beginning of every year, the company is going to pay the lease rentals. The useful life of the harvester was estimated at 5 years. Avoca paid the first installment of 60 million on 1st January 2022. However, subsequent lease payments are subject to increase or decrease with consumer price index. At the lease inception, Avoca estimated that CPI will increase by 10% annually. However, CPI increased by 14% in 2002, and subsequently 68.4 million was paid on 1st January 2023 as second installments. At December 2022, Avoca estimated that the annual increase in CPI will continue to be 14% in the future years. This is what they are giving to you. This is the most important side of the question. Okay. So the rentals is what? Currently the rental is 60 million, but they are saying that subsequent ones will be based on what? The consumer price index, that is the inflation rate. Okay. So they are saying that at the date of the inception, the person is estimating that the CPI will increase by what? 10%. Every year, you see that there will be an increase of 10% in the amount that we're supposed to pay. So looking at the 10% at the inception date, we are estimating 10% increase in the lease rentals at the end of every year or at the beginning of every year. That's what we are expecting. That at the beginning of every year, our lease rentals is going to increase by what? By 10%. That is the meaning. So if you are paying 60 right now, it means that the 60 will increase by what? By 10% next year. The next year's one will also increase by what? 10%. That's what they are talking about. So we first have to look for the rentals that we are going to pay, taking into consideration the 10%. We first have to look for that. They say that the CPI will increase by 10% every year. So if you pay 10 cedis right now, it means that at the beginning of next year, you are going to pay 10 cedis plus 10% increase. The next year, you are going to pay the amount that you have paid, which is the 10 cedi plus that one, plus additional 10% increase. That is the meaning. All right. So let's come here. So let's now calculate the rentals that we are going to pay. This is for 5 years. So we already pay 20. We have already paid that one. So let's do this thing. So let me put a solution here. Okay, let me put solution here. Okay. So let's look at the rentals. Let's look at the rental payments. Okay. 2022. How much do we pay? We pay 60 million. That is at the beginning of this one. Okay. 2023, how much are we going to pay? How much are we going to pay?
Yeah, I think you're going to pay
66 million.
66 million.
Yes.
Okay.
Yeah, 66.
Okay. 2024, how much are we going to pay?
Sir.
72.6.
72.
72.6.
Okay.
Hello, sir.
Yes, please.
You said something of 68.4 million in the question for the
6 point what?
68.4 million.
That is for that we are doing the lease liability at the date of inception. We are aware of this one in next year. So we are going to calculate the lease liability at the date of the inception, which is the initial recognition. So it will be at the end of the year before we consider this one, because we are not aware of this particular increase. The only increase that we are aware of at the date of inception is 10%. So you are going to calculate the lease liability initially on a 10% increase. It will be at the end of the year before you now be aware of the actual increase. And that is the time that you are going to reassess your lease liability. You're going to recalculate your lease liability based on the new increase now. So we are doing this for the initial recognition. We are not aware at the date of the inception, we are not aware of any 14%. We are only aware of 10% increase every year.
Thank you.
All right. So 2025, what are we going to get? $2025 will be what?
79.86.
Okay, 79.86. 2026, which is the last one, what are we going to have?
87.85.
87.
0.85.
Okay. Okay. So this is now our rentals. This is the rentals that we are expecting to pay over the years. And this is the amount that this is the schedule that we have at the beginning of the year, or at the inception of the lease. At the inception of the lease. At the time of agreement, this is the schedule that we are going to use to pay. So our lease liability will be calculated based on this particular schedule. By the end of the year here, they are saying something. So you now have to calculate, or you now have to prepare the new schedule for the subsequent one at the end of the year. And you calculate the lease liability based on that one also. All right. So let's look at the lease liability at inception. Let's calculate our lease liability at inception. So our lease liability will be calculated. All right. Our lease liability will be calculated as we take the years into consideration. We take the cash flow, we take the discount factor, then we take our present value. Okay. So which year will be the first year that we are going to use to calculate the lease liability? 2023, because this is down in our years. So 2023 will be the first one because we have already paid the 2022. The lease liability is calculated on the rentals that you are here to pay. So this will be 2023. The cash flow is 66. 66. Our discount factor is 11%. And they have given us those things already. So you don't have to go there and do anything. You just pick the single period factors. So you count to 2024. You are going to get a 2024. 2024 is 72.6. Then let's come to 2025. 2025, what will be the rentals? 79.6. 79.86. Okay. 79.86. 2026.
87.85.
Okay. 87.85. Okay. So we just go to the question and pick those things that they have given you. So you pick these ones because the lease rentals are not the same. So you can't use annuity. Annuity is used for the same amount. So you pick these figures. So you pick the year one. Year one is 0.901. Year two, it's 812, 0.7. And those are the things that we are going to pick. So someone should pick them and mention them to us.
So it's 0.901.
So the first year is 0.901. Second year is what?
0.812.
0.812.
Hello, sir.
Yes, Ina.
Is 2022 not the first year?
We calculate the lease liability based on the amount that you are here to pay. So the 2022, the 60 million you have already paid. So it's not amount that you are owing.
Okay.
All right.
Okay.
So we calculate it on the amount that you are here to pay.
Okay. All right. Thank you.
Okay. So 0.812. 2025 is what?
Zero point seven three one.
0.731. Okay. 2026 is what?
Yeah, 0.659.
0.659. So let's multiply. The first year, what are we having?
59.47.
59.47. Okay. That's the 2024. What will be the present value?
58.
50,
8.95.
68.
58.
The first year.
2024.
Okay. It's 58.
58.95.
Hey,
Mm.
I was thinking the money will be plenty than that one. Let me confirm and see.
Yeah, that is it.
That is it then.
Yes, sir.
So 58.
0.95.
0.95.
Okay. 2025.
8.38.
Yeah, again.
58.38.
58.38. Okay. 2026.
57.89.
57.89. So if you put all together, what are we having?
Linus.
Yes, senior.
Yeah, please. I think the lease period is 5 years, but you are calculating for only 4 years.
We are calculating for that. We are estimating lease liability. So lease liability is done for the amount that you are here to pay, the amount that you are owing. So you have paid 1 year already. You are owing for 4 years. So we do the lease liability for only 4 years.
Oh, okay.
Okay.
Thank you.
But if the payment should be done in arrears, it means that you are here to make a payment. So we do the lease liability for all the 5 years. Are you
Okay.
right?
Yeah.
But if you like, you can also do for the 5 years. But the 2022, the discount factor will be 1.00 because you have paid that amount at the beginning of the year, and the present value is the same as the amount that you have paid. So if you are coming for the lease liability, if you are coming to calculate the finance cost, you take the total amount, you subtract the amount that you have paid before you calculate, which is the same as you ignoring the first payment and do it for the amount, the remaining amount that you are here to pay. All right. So what is the total amount?
234.69.
234.69.
0.69.
So 234.69. So this is the lease liability at inception. So this is our lease liability at inception. Okay, at the date of the transaction, this is our lease liability. Let's now go to right of use. Let's now go to our right of use. So the right of use, is equal to the lease liability, the minimum lease payments, the present value of the minimum lease payment, which is the lease liability. The lease liability of 234 points any advance or plus any advance or initial payments. So we have the advance payment of advance payment of 60 million. I hope it's 60 million. The amount that we have paid is 60 million. So you
Yes,
are
sir.
owing, you are owing someone 2.3 4.69, but you have already paid 60 million before you are still owing this amount of money. So it means that the thing that the person is giving to you should have been the amount that you are owing plus the amount that you have paid. So that will give us 294.69. 294.69. That is our right of use. So for the year, what is going to happen is that our subsequent measurement, which will be at the end of the year, December. So December 2022, what will happen is that we have to amortize the lease liability. We have to amortize the lease liability. So we have the lease liability. The lease liability must be amortized. So we have the balance at start, which is 234.69. Then we charge a finance cost of 11%. Yes, yeah.
Now that they said payment is made in advance, payable in advance, installment is paid in advance. Do we take the installment before we charge the interest, or
No,
we charge before?
we haven't taken. You see the lease liability that we have. The
Yes, sir.
payment in advance is not part. The one that we have
Okay.
calculated, you can see that the payment in advance is not part.
Yeah.
Okay. So if you should include the 2022, it means that the figure will not be 234. It will be
Okay.
294. Then you have to subtract the advance payment because the advance payment is part of the lease liability. But we didn't
Okay.
include the advance payment, so we just take all the 234.
Noted.
All right. So the finance cost will be how much? The finance cost will be how much?
Two five
25.81
or
Okay.
82.
25.
0.82.
Okay. 25.82. So our total lease liability will be how much?
Two 60.51.
260.51.
Okay, 260.5. So this is the figure that's supposed to go to statement of financial position. But there's something that they are saying about reassessment, that the price index has increased more than the what? More than the 10%. So we have to now take that one also into consideration. But before this, the finance cost will still be charged as the lease liability at the end of this year, because the reassessment comes at the end of the year. So the finance cost will still be calculated as the normal one. Then the right of use will be depreciated over 5 years. Let's look at that depreciation there. So depreciation of right of use.
Hello, sir.
Yes, Senior.
By getting the 260.51, did you subtract any rental payment, or this one is not like that?
No, we not subtract because we already paid the rental payments. The rental payment, the next one will be paid in the next year.
Okay.
Okay, it's only in arrears that we subtract. The rentals will be paid at the end of the year. So we subtract at the end of the year. But this one, we have already paid the rentals at the beginning of the year. So we have already taken the 60 before we charge this one. So this will be the figure. Then at the beginning of next year, then we pay the rentals. So that this one will not take advance payments. We don't take the rentals at the end of the year because we have already done that. All right. Depreciation of the right of use will be 294. 294. Let me at least want to focus. So depreciation of the right of use will be the 294.69 over 5 years. How much are we getting for depreciation?
$8.9.
58.9. Okay. So what will be the carrying value at the end of the year? That will be 294.69 . Okay. Someone is saying that 58.94. Okay. Million. So this will be 294.69 minus 58.94 million. So the carrying value will be what?
235.75.
Okay, 235.75 million. This is important. So all things be equal, if there is no issue with the increment is 10% every year. This is how the things is going to look like. But the question is not telling us something. Okay. The question is not telling us something that we have to take into consideration. Okay. Let's not come. Okay. However, CPI increased by 14% in 2022. So CPI increased by 14% in 2022, and consequently, 68.4 million was paid on what? On January 2023 as a second what? Installment. At 31 December, Avoca estimated the annual increase in CPA will continue to be what? 14% in the future years. So at the end of this year, the increase in the CPA is how much? The increase in the CPA is how much? Is 14%, isn't it? All right. Increase 60%, 60 million by 14% and see what you are going to get.
$68.4.
Okay. You are going to get 68.4. Okay. So it means that the beginning of next year, the rentals that we are going to pay will not be 60 again. It will be what? 68.4. So if the rentals that we are going to pay will be 68.4 now, it means that the subsequent ones will also increase by 14%. That is what they have said. They said that Avoca estimated the annual increase in CPI will continue to be 14% in the future years. So it means that at the beginning of 2023, we are going to pay 68.4. At the beginning of 2024, this particular amount will increase by 14%. At the beginning of 2025, the amount that we paid in 2024 will increase by 14%. At the beginning of 2025, the amount that we paid at the beginning of 2026, the amount that we paid in 2025 will increase by 14%. So we now have to know the rentals that we are going to pay for the remaining period, because the lease liability was calculated taking into consideration 10% increase in the what? In the rental payment. But we have now realized that the subsequent years or the actual increase was what? 14%. So subsequently, we are going to be paying 68.4. This 68.4 will also increase at a rate of 14% every year. So you have to draw the new schedule forward for the new rentals now and use it to calculate our lease liability. That is how we are going to do. And that is the reassessment. So we now go and look for the new schedule now. So this is what we have done. The first one you are going to do it. That is why they give you 10 marks to this question, because it's not something that you just do anything there and move on. Okay. So we now look at the reassessment of the lease liability. So this is where the reassessment comes in. So the reassessment of the lease liability. Why my listen is not clear to me. All right. So the reassessment of the lease liability. So it's 2023. At the beginning of 2023, how much are we going to pay? Or how much have we paid? The amount was 68.4.
68.4.
Okay.
Yeah.
2024, how much are we going to pay? How much are we going to pay? This will increase by 14%.
77.98.
77.
0.98.
Okay. 77.98. 2025, how much are we going to pay?
88.89.
Okay. 88.89. 88.89. And the last year, which will be 2026.
101.34.
88. Okay, let me write this one. 88.89. And 20.
It should be 88.90.
88.90.
Yeah.
Okay. So in the example, you can do your approximations, because this is approximation. So if you use the 88.89, there won't be any problem with that. 88.90, there is no problem with that. Are you okay?
It is 88.897.
Okay, so it should be 88.90. That will be okay. Okay. So 90. All right. This will be 101.
35.
34.
35.
Okay, let me make it 35. There is no difference. Okay. So this is the rentals that we are going to pay. But this was not what we used to estimate our lease liability. Our lease liability was estimated on different schedule. So it means that since the increase is now 14%, it means that the lease liability that we have calculated is wrong. So we have to calculate our new lease liability now. So we have to estimate the lease liability at the end of December. So December 2022, we have to reassess our lease liability or recalculate our lease liability using the new development now. Okay. So let's come. Okay. So we have the years, we have the discount factor and all those things. Okay. So let me now come here. All right. So let's have the years. Let's have the cash flow. Let's have the discount factor, and let's have the present value. Okay. The discount factor, you are going to use the same discount factors. But the years now, where are we going to start from? You can see that we are here to pay the 68.4, isn't it? Because we are reassessing the lease at the end of what? 2022. But when are we going to pay the 68.4? When would the 68.4?
In January 2023.
January 2023.
So it means that the present value of that particular value is the same as the 68.4, because 31 December is the same as first one. So we are going to use the 2023, which will be the year one, or we make it year zero. Since the present value will still be the present value, we make it year zero, which is now, because the 68.4 will be paid at the beginning of the next year. We are doing this at the end of this year. It means that the same day, today and tomorrow, it's just like the same day. It is the closing balance that will be sent to the opening balance of that one. So we make the years, the first one should be 0, since that is now. There's no year 0, but year 0 means now. Okay, so we make it 0. So we make it year 0, which the cash flow will be 68.4. Then the discount factor will be 1.00 because that will be the same value. So we have 68.4. Okay, then we now start with year 1. The year 1 over here is the same as what? The year 1 over here.
It's the same as the 0.901.
No place. You have to be very careful with this one. The year 1 over here will be 2024. So
2024, yeah.
2024 will be what?
77.98.
Okay, so what discount factor are we going to use?
0.901.
No.
%14.
No. You have to be very careful with the discount. 0. What?
812.
0.812. Let me confirm that. Okay. Okay. Let's come to which year are we doing this? We are doing this at the end of
2022.
At the end of 2022. Okay. At the end of 2023. Okay. At the end of 2023. So from 2023, when are we going to receive the 77.98?
January 2024.
Which will be the same as December 2023.
Yeah.
Are you okay? Okay. So from 2022 now to that time is 1 year, isn't it? Okay. But we have already done 1 year already. So the first discount rate, we are not going to use it again. We are not going to use this. The 0.90, we are not going to use it because we have already done with what? The first year. So we are going to start with what? 0.812. All right. So we start with 0.812. So you take into consideration the period. So if you have done the 1 period already, it means that 0.90 is already used. So you use the next one. If it is at the end of second year that we are doing this, the discount factor we are going to use over there will be the discount factor for the third year. So we are going to use the 0.812. That's what we are going to use. Okay. So we have 0. Okay, this will be the amount that we are going to receive. Okay. So we have 77.98. Then we have 0.812. So year 2, which will be 8890. What will be the discount factor we are going to use? What will be the discount factor?
0.731.
Okay, 0.731. Let's come to year 3, which is 2026. We are going to receive 101.35. What will be the discount factor?
It will be 0.659.
0.659. So let's now find the present values. Okay, 63. So the first one is 63.32. 63.32. Okay.
So the next one is 64.99.
64.99.
Yeah.
Okay.
And the last one is 66.79.
66.79. 79. Okay. So let's now add then.
So the balance
It will be what?
263.7.
Hey, someone is saying 206.
263.5.
Okay, 263.
263.5.
0.5. Okay. So this supposed to be our new liability now, isn't it? Based on the estimate that we are given. But let's come and see what is the liability, the lease liability we have. What is our lease liability? It is 260.51, isn't it? The one that we have in the books at the end of this year, based on the original estimates, it is
Yes,
260. Okay. But our liability should have been what? How much? Should have been 263.50, isn't it?
Yes.
So what is the difference? So 263.50 against 260.54. What is the difference?
It's 2.9.
2.9. So what you do is you now come and increase your lease liability by 2.99. Then you count your right of use and also increase the carrying value by 2 points. So you just come and add a difference to it. If it's a reduction, you subtract. So that is all about the lease liability. But I said that if the company is using revaluation model, this increase, liability is increasing, so it's a loss. So the 2.9 now will be treated as a revaluation loss. So we are going to add it to liability, which crediting the liability. Then we go and debit a revaluation surplus relating to this particular right of use. But if there's no revaluation surplus, then it is a revaluation loss for the first time. We send it to what? Profit or loss. But this one, nothing was said. So we assume that they are using the default method, which is the cost model. So you just reassess your liability. Any difference? This was for 10%. But now using 14%, the liability should have been this amount. What is the increment? Go and add the increment to the balance that you have based on the original estimate. Then you add the same increment to what? To the right of use. This is all about what they are asking you in the exam, and this is what they are asking you to produce for 10 marks. All right. So I want to take another question, but it's already 7. So seniors, do we have any question?
Linus, please. You said the 2.99 will be added to something.
It will
on
be
the
added.
revaluation.
It
The
will be
revaluation.
added if it is a revaluation model. If it is a reval, so you have gotten the cost model.
Yes, the cost
model.
Okay,
it will be added to the old lease liability and the carrying value
of the assets. Okay, but if it's a
of the asset.
revaluation model, it means that there will be a revaluation surplus somewhere on the assets. So what will happen is that we assume that we are revaluing the lease liability. So the lease liability is increasing. So if the lease liability is increasing, it's a loss to the company. So the increase will be added to the lease liability, but that particular increase will be subtracted from previous revaluation surplus relating to the asset. It will just be treated as a subsequent revaluation loss. So it will not be subtracted from the asset, but it will be subtracted from the revaluation surplus. Are you okay? Okay, but you haven't seen that one before, so don't worry. They will give you question on the normal one, which is the one that we have done. But who knows? They can bring a revaluation issue where the lessee is carrying the asset as revaluation model. You just assume that the reassessment of the lease liability is a revaluation of the lease liability. So if the lease liability is increasing, it's a loss. So the loss should be taken to what? Profit or loss if there's no revaluation surplus relating to the assets. But if there's a revaluation, the loss will be subtracted from other comprehensive income because there's a revaluation on the assets. If the liability is decreasing, it means that it's a gain. So that gain will be added to the revaluation surplus, which will be in the other comprehensive income. And the gain will be subtracted from the lease liability. That is all. So it will just be treated as a normal revaluation of an item. All right. Seniors, any other question?
I think you have to get us a question to solve on it too.
So I've forgotten about this one. There is something that they will pay. They say that they have to pay something, 3 million, isn't it? So look at this one. I haven't spoken about this. They say they have to pay 0.3 additionally. This is something that is avoidable. So it is based on condition. So they have to produce, if they produce in excess of 30 million units per annum from the machine, they are going to pay 0.3. So they can decide to produce lower than that. So we don't take this into consideration when we are calculating the lease liability, because the company can produce without reaching the 30 million. So this one, as at when it is due, the company will just pay it and the other company will treat it as an expense. So the company is expected to pay 0.3 per acre of harvest in excess of 30 units. And they are saying that Africa plans to use the harvester to achieve 40 million acres of harvest each year during the lease term. It's a plan, but it can happen that it will not be it will not be utilized or it will not be materialized. But for the rentals, whether you like it or not, you are going to pay the rentals. Whether you like it or not, you are going to pay the rentals. So what will happen is that this 0.3 is something that is based on condition. So we don't include it in the lease liability calculation. But whenever the company produce above that, they will just pay. And that is the end. So the question says that Avoca harvested 40 million acres of greens, and accordingly an amount of 3 million was also paid along with the second installment. So this one, it means that this amount will be paid. This amount will be paid at the beginning of the next year. So the company will going to recognize an expense of 3 million, which is a variable. It's something that is based on conditions, so we don't include it. The company can decide to produce lower than that, or it can happen that they will not even produce up to that level. So we actually ignore that particular 0.3 or the 3 million. But if they actually produce more than that, they are going to pay. As at when it is due, they will pay and they will move on. So this 3 million will also be treated as an expense in the profit or loss account of the company because they have achieved that particular one. And this they are here to pay because it was paid along with the second installment, which will be paid in the next year. So this will be a current liability in the statement of financial position. All right. So that is about that particular one. So we don't include the 3 million in your lease liability calculation. It's based on condition, which is acres. The company, there is no guarantee that they are going to produce with that particular one. It can be a reduction. It can also be that they will not produce, or they can decide to avoid this by producing below the 30 acres every year. All right. So that is that. Any question? Seniors, any question? So someone was saying that I should get them questions, isn't it?
Yeah, Linus, yeah.
Yes, sir.
Don't worry, the questions are there. Let me look through and see if I can get. Yeah, the question, I have another question there, which is on lease liability. The question, yes, I've arranged the questions in order. So the question that is following this one is reassessment, but that one is about the useful life. So you can try that one too and see. All right. So if we don't have any question, seniors, thank you for coming.
Linus,
Yes,
can we
sir.
have a question That includes tax liability.
On the list?
Yes.
Okay. If you can explain the tax liability side.
Oh, just in case you have a lease asset and maybe you are being asked to charge tax on it and you have to determine the tax amount and all that.
Okay. So maybe the lease itself, the tax authority will be granting you capital allowance on the interest and also capital allowance on the lease assets. So there can be a situation where there will be a deferred tax issue on the lease. Because if you're having a lease asset and you're using revaluation model, it can happen that the fair value of the asset or the carrying value of the asset will be higher than the tax base relating to the lease liability. But whatever be the case, I don't think there will be a tax liability unless maybe the jurisdiction that the company is operating in, maybe there's no tax allowance for the finance costs and those ones. So the company will be asked to pay tax or something. But there can also be a situation where they will frame the question and they will be asking you to maybe whatever you are going to get from the lease liability, it will be taxable. Or maybe they can say that if you use the lease asset to produce this number of units, the amount will be taxable. So if you're here to pay the tax, then you can calculate the tax component on the amount that you are going to pay on the unit that you have produced. Then you provide for it as a tax liability. So maybe there can be a case like that, but I don't know. So senior, maybe there can be an issue. There can be an issue of deferred tax. There can also be an issue with a situation where they are saying that any unit that you are going to produce from the lease assets will be taxable. So if you produce the unit, you calculate your tax. If you are here to pay, you put it there. All right. But it will not be something that will be for the lessee and then the lessor. It will be between the lessee and then the tax authority. So it will not be taken into consideration when calculating the lease liability. The lease liability is just a compulsory payment that you are going to make. Some things that you cannot avoid, some of the payment that you cannot avoid. Those are the things that we use to calculate the lease liability. All right.
Okay. Okay. Thank you.
All right. Any other one? Sina Robert. Sina Robert.
Yes, sir.
Any question or
No, sir.
you're asking yourself, is it this they're asking me to do in the exam hall?
Is it?
Or you're asking yourself, this is what they are asking me to do within 20 months or something. It is well.
It's not easy, I see it.